Today, we are tackling one of the hottest questions in the markets right now. Are AI stocks in a bubble? It feels like everyone, from retail traders to billion-dollar fund, is chasing anything labeled AI. And at the center of this storm stands one giant, NVIDIA. In this video, I'll break down what's really happening, the data behind both sides of the argument, and my own take on whether AI stocks are dangerously inflated or just getting started. Let's start simple. What is a bubble? A financial bubble happens when asset prices rise far above their fundamental value, usually driven by speculation, hype, and the fear of missing out. We have seen it before. The dot-com bubble in the early 2000s, the housing bubble in 2008, the crypto hype cycles. Every time the same pattern repeats. And now it feels like we might be witnessing the next one, the AI bubble. But is it really the same, or are we looking at something with real, sustainable growth behind it? To answer that, we need to look at NVIDIA. NVIDIA designs GPUs that power artificial intelligence systems. The chips used to train massive models like GPT and Gemini, run data centers, and even accelerate robotics and self-driving cars. Their business model is solid. Revenue comes from hardware sales, software licensing, and now AI infrastructure. They have long-term relationships with big tech companies like Microsoft, Amazon, and Google. In their recent quarters, NVIDIA reported record-breaking profits and revenue growth beyond expectations. It's no surprise that investors are trading NVIDIA like the next trillion-dollar powerhouse. But whenever everyone agrees something can only go up, that's usually when we should be careful. Let's start with the bearish side. The people warning that AI stocks, especially NVIDIA, are deeply overvalued. NVIDIA's forward PE ratio is hovering around extremely high levels, way above the S&P 500 average. Many analysts argue that growth expectations are priced for perfection. One miss, one slowdown, and the stock could tumble hard. Sequential revenue growth has already begun to flatten. Some analysts say we've seen the peak of AI chip demand, at least temporarily. US export restrictions to China have already hurt NVIDIA's sales, and future regulation could limit how far they can expand internationally. Big players like Google, Amazon, and Meta are now developing their own AI chips. That means NVIDIA might slowly lose its dominance, just like Intel once did. We're seeing classic hype signals, retail investors piling in, headlines predicting the AI revolution, and social media echo chambers calling NVIDIA the next Apple. Sound familiar? It's exactly how every bubble starts. But here's the other side, the bull case. NVIDIA isn't some speculative startup. It's a company with real revenue, real products, and real demand. They're not selling a dream. They're selling hardware that literally powers AI. Their CUDA software ecosystem creates massive lock-in. Once developers build on NVIDIA's platform, switching becomes costly and difficult. That's a moat that even giants struggle to cross. The AI market itself is projected to reach over $1.8 trillion by 2030. That's not a hype number. It's a realistic projection by McKinsey and Goldman Sachs. If NVIDIA even maintains part of its dominance, the valuation could make sense long term. Also, when we compare NVIDIA's multiplies to those from the dot-com bubble, the difference is huge. In 2000s, most internet companies had no profits at all. NVIDIA, on the other hand, is making billions. So yes, the stock might be expensive, but it's not baseless. Let's talk analysis for a second. How can we measure whether NVIDIA is in bubble territory? Here are a few tools investors use. Price to earning ratio. Compares valuation against actual earning. PEG ratio. PE divided by expected growth. A PEG near or below 1 is healthy. Capability realization rate, CRR. a new economic measure comparing market expectation to actual capability delivered. NVIDIA currently shows strong realization, meaning much of its hype is actually being achieved. So, while the price is rich, it's not purely detached from fundamentals yet. Now, that doesn't mean it's risk-free. Here are signs investors should watch closely. If revenue growth stalls for multiple quarters, that's a red flag. If AI adoption slows across industries, demand for chips could shrink fast. If the Fed tightens liquidity again, high valuation stocks will take the biggest hit. If major clients like Microsoft or OpenAI start designing their own chips, NVIDIA's margins could collapse. So, is NVIDIA part of an AI bubble? Here's my honest view. We might be in the early stages of an AI bubble. But that doesn't mean NVIDIA is a bad company. It just means investors might be overestimating how fast this revolution will grow. AI is real, the potential is real, but that doesn't mean prices can't overshoot reality. Personally, I think NVIDIA is a fantastic company, but at these prices, it demands perfection, and markets rarely stay perfect for too long.